Good morning, everyone, and welcome to the European crossover webinar. And we have seen the dollar find a little bit of a bid after last week kind of fading on Friday. And the euro has come off a bit from where we were at last week. We were talking about that rally that we saw, and they pushed it pretty good on Friday. As we had indicated last Friday, that those lows on Thursday happened to be the 50%. So that was a good area for them to step up from. And I didn't think they'd get past or not too far past 2010, but they did. And they made up in the 2050s and basically were just squeezing some late shorts. Taking a look at what we have on tap for today. We have had some Spanish data, but we do have at the bottom of the hour Eurozone Centix index expected to come in at 1.9. And then out of the States, nothing. We just have employment trends. That's it. So it's going to be fairly quiet. Tomorrow we do have German exports and Italian industrial output. And the States is going to be another quiet session. Also, NFIB business optimism. And that will be it. So, boy, it's going to be quite a dearth of economic activity, at least here in the States, and really across the board. Not too much data to start with. Taking a look here on FX, as I mentioned. Seeing the euro dollar just paring back from those levels that we stretched out to on Friday. If you remember, like I said, this happened to be a 50%, but nonetheless, we had this sell signal and indicated that in order for this to get spooked, you'd have to get a daily close above 2073 to negate, the short-term sell signal. So it's still a sell signal. So we've gone and paired back. The real mover to me has really been the cable, how that came back and closed good at a very good level and sharp, pretty good turnaround, which was on Friday. Aussie Dollar, same thing here. We pushed higher, but kind of run into some resistance. And the Kiwi's been a bit stronger than the Aussie, and that's kind of holding its own, relatively quiet. Dollar CAD, after dropping and getting closing below 27.65, is also holding in a very quiet mode. And take a look at the dollar pace. We rebounded a little bit. I think resistance comes around 2019. There was a potential we could have pushed a little bit lower, but kind of holding our own for right now. And dollar yen had that trouble at 568 that we got a little bit past it. And I think that's our bias chart today. Also resistance, I think it's 568. Could be wrong, but high for days so far is 566. And then cash dollar index just kind of holding its own from down here after that drop. Not really a whole lot. We'll go on and take a look at the news. Australian dollar soft on vaccine concerns and Kiwi slightly firmer. The Australian New Zealand dollars traded water on Monday as positive market sentiment was blunted by disappointing reports about the efficacy of COVID-19 vaccines against new strains of the virus. Australian dollar opened the week slightly lower on Monday, but climbed as much as 0.3 by Monday. The Aussie stood 0.2 lower at 76.78. Across the Tasman Sea, the Kiwi 2 was trading sideways at 71.99. Optimism about a global economic recovery and a weak U.S. dollar had supported the sensitive Aussie in Friday's session, but sketchy progress in fighting the coronavirus pandemic was spooking investors. The weaker than expected U.S. non-farm payrolls fanned hopes that a $1.9 trillion COVID aid package would be passed by lawmakers as soon as this month, and that was supported for the antipodian currencies. However, the near-term gains should be capped given concerning weakened news about the efficacy of the vaccines on the South African strain. Australian economy performed better than expected over the past year, but significant monetary support would still be needed for some time yet, the RBA stated. And the central bank said its cash rate left its cash rate at a record low of 10 basis points, but supposedly by extending its bond buy by another 100 billion Aussie dollars. And on the dollar paused after losses as investors seek fresh clues on the U.S. economy. The dollar stretched against most currencies on Monday as traders awaited more data on the U.S. economy after a disappointing jobs report last week. The euro held gains versus the dollar, but faces a test later on Monday with data that is expected to show German industrial output growth slowed end of last year. Speculators have been reducing short positions in the dollar, but some analysts say better U.S. economic data and continued progress in fighting COVID will be needed for further dollar gains. Soft non-farm payrolls pulled the latter out from under the dollar. Now the markets are questioning whether the dollar can rise any further. A lot of that depends on the coronavirus. The pound bought 37.31, close to almost a 3-year high. The U.S. economy created fewer jobs in January, while losses to the previous month were deeper than initially reported. Joe Biden and his Democrats pushed toward a $1.9 trillion COVID relief package. House Representative Speaker Nancy Pelosi has predicted the final relief legislation could pass Congress before March 15th. Speculator net bearish bets on the dollar fell to 29.95 billion for the week ending February 2nd, compared with net shorts of 33.81 for the previous week. In the cryptocurrency, Ethereum spot prices rose to 1618 after listing Ethereum futures on the Chicago Mercantile Exchange on Sunday. And Bitcoin, the most popular currency, fell 0.2 or half a basis point to 38,693. Well, actually, right now, Bitcoin is trading right now at a little over 39,000. We can go in and take a look there. So you can see here on the Bitcoin, we're actually right up here above 39,000. We've actually done a pretty good job here. We took off and looked like it might even push even higher. We got past that 38,700, which was that buy signal, which did take us up pretty close to this 41,300. And then over the weekend, we did get this dark cloud cover, and that opened the door for us to move lower. We did get an additional bounce to this area. It rallied up and then it failed. And this was a potential that, wow, if this would have broken here, we could really see a good slide. But we're continuing to defend this. We've jumped back up above that 38,700. So if we can jump back above there, that really would ignite it. But came up a little bit short of that 41,300. In the Nasdaq, we did hit all-time highs. Did get a little mini gravestone doji. Just basically the market's just a little bit tired up here. So you saw a little bit of a give back. We'll see what happens in the U.S. session here. Taking a look here. On the 30-minute. Once again, just quiet. Still in a buy mode though here on the 30-minute here. But just a bit of a pair back. Probably not a whole lot of action until we get into the U.S. session. And with that, we'll move into the analysis. Didier says, can you please take a look at silver? Yeah, we can take a look at silver. Bear with me. Well, I mean, a whole lot to say about this thing after that big fall that we saw up here. Remember talking about that key weekly resistance. Actually, there was a huge weekly resistance right there at that 30.25 area. We slid back and then the bottom fell out when they raised the margins and everything came unglued. But for silver, the key thing would be right down that closing basis, 27.71. We'll go on and just go and mark that off. Right there. That will be resistance. And if we're looking at it on a fib retracement, so 27.71 is that key area. And then on top of that, you've got the 38% at 27.64. So you got a confluence there. 27.64 is a 38% retracement, and 27.71 is going to be that level. They may push it up to 75-ish, but you can see, and actually this rebound here was 27.77. So you can see some good confluence there. This close here, 27.71, 38% retracement coming in right at 27.63. And this high, before we jumped up, the high at that time was 27.76. So a lot of good confluence around that 27.75 area. If you took a look at it on a 2-hour chart, some resistance right there, which is almost where they stopped, 27.40, basically 27.43. So we did pair back. And to hold, they got to defend this area. 26.73 is where they could come back and try and defend it on a 2-hour chart. With that, we'll move into FX. So the euro posted a rally on NFP day, recovering from a 50% retracement at Thursday's lows. The pair would need a daily close above 2073. You can see that right there, to negate the sell signal generated early last week. Because remember, we had that sell signal here. Remember, we were looking for a daily close below 2073 because we'd already crossed over here. And we already were struggling at the time. So we need that daily close right here. And we got that daily close, and the market initially closed just a little bit lower. Remember, we had those lows before. I think we had them at, what was it, 2073 one time, and then we had 2068, and both times they were super, super close. And then we finally broke. And then I think here we had our low for 2008, and same thing that held right there, right on the dot on the bias chart. And once we get this daily close below 2073, that opened the door for us to move lower, and move lower we did, but turned out that this was the 50% from these lows here. So we saw a nice little spike. And of course, as we finished into the week, they really put the shorts, the late shorts, feet to the fire. Hence, we pushed up in here. But anyway, said it would need to be would need to close about 2073 to negate the sell signal from last week. Intraday resistance could stretch up to as high as 2089 with support at 2005. So it's going to be 1973 because that's our initial one. And then if we got crazy, you'd be looking to, it could squeeze as high as 2089, but it would still have to get a daily close. But there's nothing as far as data to suggest we can push too far beyond that. So it's that daily close of 2073 for the high, for resistance. And we're actually starting a little bit on the weak side, and 2005 on the support. On to cable. So cable closed the week at closing resistance of 37.33. The pair appears destined to challenge the weekly level of 37.93, although we're a bit weaker here, which will be resistance. Support will be 36.41. And resistance at 37.93. And that's that weekly wick we'd referenced before. So if it gets up there, that's potential we could go to, which would be 37.93. Remember, this area up in here is around the 78%. It's kind of keeping the market in check, but potential, like I said, we can get up there to that 37.93. Seems like it wants to get there, but we'll see what happens. Next would be the Aussie Dollar. So the Aussie rallied on Friday to close at the week's high. Resistance to start the week will be 77.12 with support at 75.94. A daily close above 77.12 would negate the short-term weakness. So 77.12 on the upside. And support at 75.94. Onto the Kiwi. The Kiwi held the 50-day moving average on Friday. You can see that right here. The pair's resistance to start the week will be 72.34 with a daily close above to generate new momentum to challenge recent highs, which would be 73.14. But for right now, resistance would be 72.34 with support at 71.32. A relatively quiet start to the week. And onto the dollar CAD. The dollar CAD closed lower on Friday below the key level of 27.65. It really opened the door for us to move lower, but we're open the day time a bit quiet. Critical support to start the week will be 27.18 with resistance at 28.22. A daily close above 28.52 will place bulls back in control. So support will be 27.18. And on the upside, 28.22. But that was bearish closing, losing this 27.65 on the close. That was actually our bias chart support for Friday, but we're kind of holding here. But and you can see here between these two moving averages, maybe they're going to try and bottom themselves out, but 27.18 would be critical for this market to hold. Moving into the dollar peso. The dollar peso closed with a thud on Friday for the low close of the week. Support to start the week will be 19.96 with resistance at 20.19. So we're coming close to resistance, but that was really a tough close for bulls last week. And in case they started out the week lower, it'd be that critical to 19.96 on the dip, but holding steady to start the week. On to the dollar yen. The dollar yen found offers at the bias chart resistance level of 568 with a high of 575. The pairs had a strong recent run. A pause to refresh may be in order. Support to start the week will be 492 with resistance at 566. Oh, okay. 566 in the high. so far has been 566. And this has starting to broken a little bit higher. I guess we'll have to switch this now to bullish. And on to the dollar index. The dollar index struggled with resistance at level 91.49, paring back on Friday. That was that. I think that was no, we actually gave it up to the previous day was 91.49. We gave it up to 91.73, but it struggled. I think we made it to almost 60 before it struggled. Before paring back on Friday. Support to start the week will be 90.78 with resistance at 91.39. So 90.78. 91.39. And on to the cross rates. So the Kiwi yen has its sights on challenging the weekly level of 76.31, which will be resistance to start the week. Support will be 75.29. And that weekly level of 76.31, we'll take a look at that. And you can see it coming across here on the weekly chart right there. You can see the significance of that. That's huge right there. Look at that. We'll see if we can go and hit that, but that would be resistance, 76.31. Moving on to the euro pound. The euro pound stabilized at the 87.50 area on to finish the week. Support to hold for the week will be 87.34 with resistance at 88.28. And it needs to hold this right there. It's actually a little bit lower here. It's actually just a hair below here when you look on a weekly, but it's got to hold that 87.34. So right now we're kind of holding our own, but if you look at it on a weekly level, when I mentioned 87.34, because it's a lot of good weekly volume right in here. And so it's going to be critical, though, to hold that 87.34. If not, we really open the door for us to blast to 87. Moving on now to the euro odd. The euro finished the prior week falling back to the support level of 56.90. A daily close below 56.23 will bring on a wave of selling. Immediate support will be 56.59 with resistance at 57.72. So immediate resistance is 56.59. With resistance at 57.72. And it's key for them to hold. As I mentioned, if we do get a daily close below 56.23, right there, you see that? That's going to be bad. You get that daily close below this one, then should hit a brand new wave of selling. So far, we're holding our own, but if you look on a weekly chart, we get below that, you can see we're going to flush this thing good, but good. But so far, they're holding up. Moving on to the Euro Kiwi. The Euro Kiwi saw some short covering at the end of the week. The pair needs a daily close above resistance level of 68 even to generate further buying. Support will be 66, 67. That's only 2 pips lower than Friday's bias chart support. And resistance is going to be the 68 even. And on to the Aussie yen. Still looking pretty good here. The Aussie yen broke to new highs to close the week. The pair's in an area of wicks and bodies on the weekly chart, suggesting we may see a struggle after initial push to start the week. Resistance will come in at 81.28. We're support at 80.01. And we'll take a look at that on the weekly. So you can see here we did close strong at the end of the week, best close ever. And I said after an initial start, we may see this market struggle a little bit. And let's take a look at it on the weekly chart. You have to come all the way back here. But if you look here, you see right here, all these bodies, you'd have to come all the way back to the fall of 2018. But you can see right in here, you see this whole area of weekly wicks and bodies here. It's going to have a little bit of a tough time to get beyond this area here. So once again, the resistance is 81.28, which would put us in right there. That would be, see 81.28, see you got these wicks here coming across here. And even here, you see right there. So it's going to have a tough time, I think, getting beyond that. So I think we could, as I said, after initial push to start the week, I think we're going to have some problems. Actually, I didn't flip to weekly. Let me flip it back to weekly. There we go. There we go. That's much easier to see. How it's still on the daily. So you can see right here, right there, there's 81.28. You see all these little wicks coming in right there and some bodies. See this one here. This is all I think is going to be a tough, like right here, this close here. Confluence is with this wick right there. That comes in at 81.49. But if you're looking at these lower wicks here, right there, 81.34. Once again, like I said, if we get that early blast to start the week, I think we're going to struggle up in here. Because if you look at this whole area, look, we'd really have to break higher. Doesn't mean that eventually couldn't, but we'd have to probably consolidate like here. We can break higher, but will it go and hold? My concern is if we break here, they'll kind of struggle and maybe pare back a bit. But we'll see what happens. Moving on to the guppy. The guppy closed the week above 44.51, right there. Opening a potential move to 46. Resistance to start the week will be 45.19 with support at 43.62. So 45.19 on the upside. And 43.62 on the downside. And we're looking at it on a weekly chart. And you can see these wicks coming in right there. So right there, there's that weekly wick at 44.96. And it looks like where the market's starting to struggle here, but we did put it up as high as 45.19, but you can see right there coming into that 45. It's having some trouble. High so far is just a bit higher from Friday's close, 44.91. And lastly, we'll look at sterling odd. Starting out continues to trade in a wide range. Key resistance will be 80.37 with the daily close to generate further buying. Support will be 78.57. 78.57 with resistance at 80.37. And right here's that key level there at 80.37. The market's not doing anything at this point. And to close it out, we'll take a look here. Nasdaq appears to be once again pairing back. Actually coming into a little bit of support down here. And if we look here, we've actually fallen below the daily VWAP. That broke this, allowed this market to break lower. Here comes into the 2-day VWAP, but a little bit of support here. And actually looking on a 5-minute chart, could potentially come back to 13,619. And on the daily, you can see here trying to make a little bit of short covering coming in. But looking at the 2-hour chart, the key is holding right there above that 13,605. Right there. And Bitcoin's still holding up above that 38.8. As long as we can hold above that, we can try and make that move. Like I said, this was important for us to defend that 38.8. We'll see where we go from here. And with that, we'll go on and close it out here. And thanks for joining us here on the European Crossover webinar.